Hello, my name is Chad Livengood. I'm a CAFR reporter for the Detroit News. Today I'm going to show you how to mine for stories in a comprehensive annual financial report, otherwise known as a CAFR. Let's get started. Government agencies are required to publish a comprehensive annual financial report each year. Some states require these reports to be filed within a certain time frame following the end of a government agency's fiscal year. The document contains a balance sheet information about a government agency, details about its assets, cash flow, operating and capital debt, and long-term liabilities for past and present employees' pensions and health care. Some of the reports can contain a rich record of historical information about a government agency, including data about programs and employees that can't be found elsewhere. The first step is finding the CAFR. And sometimes it's easy to find on a government agency's website, and sometimes Google or some other search engine is an easier way to find it and locate it. Here for this presentation, we're going to use Detroit Public Schools 2014 Comprehensive Annual Financial Report. They all typically come in a PDF file. If you can't find it on a government agency's website, call them and ask for one. A good place to start is the table of contents. Each report should contain an independent auditor's report that will give the auditor's analysis of the finances from its own independent audit, as well as a management discussion analysis of the finances of the particular government agency you're looking at. In the table of contents, it's also a good way to do keyword searches if you're looking for the net position or end of year financial outlook for a certain government agency. And also it's a good way to find where they list their deficits or fund balances and information about their post-employment benefits and long-term unfunded liabilities such as pensions. The comprehensive annual financial report has a lot of past and present data, but that historical information can be really useful for financial analysis of long-term issues going on in your particular government agency. And here in Detroit Public Schools, you can see that they lay out for you what was the unassigned, undesignated fund balance or deficit for every year over a 10-year period. It shows you the expenditures and also give you an idea of what the fund balance was on a percentage of the general fund, which is, they're doing the math for you here. CAFRs are really a one-stop shop for data. In Detroit Public Schools, they have operating statistics that are pretty useful for finding out what was the enrollment 10 years ago and how does it compare to today. And they do breakdowns here of the cost per pupil from 2014 compared to 2005 and years in between. And you can see here that the enrollment has declined by nearly 100,000 students. The operating expenditures are half what they used to be a decade ago, but the cost per pupil has significantly risen over this time period. And this can be pretty useful for finding story ideas, just looking at the data and doing an analysis, and that could be the impetus of a different story in of itself. As I was saying, there really are a one-stop shop for data. If you needed to find out the interest rate on a government agency's general obligation bonds, check the CAFR. It's usually there. And here in Detroit Public Schools, they list how much was issued in individual years, what's the maturity date, and the interest rate or range of interest rates. And another slide here from the Detroit Public Schools CAFR in 2014, they lay out for you the series number, how much has been paid down on certain bonds, and how much is due within 1 year. And this is information that can be really onerous to find if you had to go through bond documents. But here in the CAFR, they lay it all out for you. The comprehensive annual financial report should not be a document that you write about once a year when the audit comes out and then forget about it. You can go back to the document for financial analysis of data, especially when it comes to funding from the government agencies. And here for Detroit Public Schools, I was looking at state funding for the school district. And if you look at the 2003-2004 school year, they had 150,000 students and they were receiving $7,180 per student. Fast forward 10 years later, they have lost over 100,000 students, and now they are getting just over $66 per student more than they did 10 years before that. And if you look at in between, they had numbers that were higher, much higher numbers, but they got some big cuts also from the state during the recession. So this is pretty useful information if you need to be able to put in context the new funding amount being proposed for the school district here in particular, and put in context how does that compare to what they were getting last year, 3 years ago, 5 years ago, or 10 years ago. There really are endless story ideas in these comprehensive annual financial reports. Here's a document in the DPS CAFR that lays out the number of employees per position over a 10-year period across the entire district. And a couple numbers really stood out at me. If we zero in on that chart and take a look at the number of librarians, there were 2 librarians in a school district of 46,000 students in 2014. In 2005, there were 80 librarians. And more shocking is there was 200 central office administrators in 2005, and there were 204 administrators 10 years later. Somehow they have 92,000 fewer students, 5,000 fewer teachers, 119 fewer principals, and yet Detroit Public Schools grew its central administration by 4 officers. The administration has yet to be able to explain to me how did that happen during this time, especially in the context that the last 6 years they've had emergency management, and the state-appointed overseer of the school district, his main mission has been to cut the bureaucracy, and yet somehow the central office grew during this time period. There's also information about other beats in the comprehensive annual financial report. Business reporters, for example, can find information about taxable value of a property for the city's largest employers. Sometimes these reports will list who are the biggest property taxpayers because that's a base of their revenue. And here you can see there's interesting data here about Chrysler and General Motors holdings within the city. And in 2005, GM and Chrysler had 11% of the property tax base in Detroit. And by 2014, it had greatly shrunk in the size of the overall property tax base in Detroit to about 2%. It's actually less than the MGM Grand Casino in Detroit. And that's a pretty telling story, especially for the story of Detroit. It also, you can see from this data, there are businesses that no longer exist that have been taken off the tax rolls because they have moved out or in some cases actually been torn down. Let's dig into the data a little bit. Some CAFRs include a written analysis breaking down the government agency's finances for you. On this page in the Detroit Public Schools CAFR, they break down how much the net deficit, overall deficit year over year, had increased from $686 million to almost $764 million. And they also give a laid out of revenue overall decrease and expenditures overall change year over year. But also more importantly, they give you a breakdown of of that fiscal year's budget deficit. And here they show that the general fund deficit increased from $94 million in 2013 to about $170 million in 2014. But if you look at the overall deficit of all government funds, which includes like the school cafeteria and the athletics funds and some other funds that are not tied to general operating funds of the government agency, they show that the overall deficit went from $60 million to 122 million. So it really shows you here that the general fund deficit in Detroit Public Schools is what's driving its overall deficits. And here's another analysis in the management and discussion section of the Detroit Public Schools CAFR, and it lays out a little more information about the actual deficit. It also shows you some more in-depth information about why revenues were down, and gives you in particular reasons here that you can use for your reporting. I would really focus on general fund figures when you're looking at these CAFRs, unless you have a specific issue in a different ancillary fund. The general fund figures are going to be your primary data that you want to be looking at. And here they have a laid out of revenues, and it gives you an idea of how much revenue from local sources has gone up, how state funding has gone down, and how they are losing federal funding. And this kind of prompts some questions to ask for news reporting. Why is local revenue up while state and federal revenue is down? And is declining enrollment to blame for loss of state aid? Or was there actually a basic state aid cut? And finally, what federal aid was lost? Because sometimes that changes year to year, but this is a good way of keeping track of the total loss of a federal grant from year to year. It's also a way to have a good breakdown here in the spreadsheet, and it gives you an idea of percentage increases, and they do the math for you, which is really helpful, especially if you are working on the fly at times. And here you can see how the instructions cost is down, while support services is up, and community services is down 28.9%. And athletics is up nearly 50%. So it raises some questions here that you can use for reporting. Why were instructional expenses in a school system with poor performing schools reduced while support services went up? Which community services were reduced? And why is spending on athletics up nearly 50% in a school system that can't pay its bills? These are legitimate questions you can mine out of your comprehensive annual financial report. You can also, in the layout here of the general fund spreadsheet, I'll give you an idea of how, if the entity is paying any money out of its general fund on debt service. And in Detroit Public Schools, they are paying a significant penny out of the general fund towards retiring past operating debts and paying a significant amount of money on interest. And if you do the math here, debt service payments and interest total $56.5 million. The deficit spending of the school district was $79.4 million here in the general fund, and so debt payments and interest account for 71% of the deficit spending here in Detroit Public Schools in this one category. Let's take a look at pension funding. Each comprehensive annual financial report should contain information about a governmental entity's annual contributions towards its pensions and other post-employment benefits for workers, as well as funding level compared to total benefits owed to retirees. For this example, we'll turn to the Comprehensive Annual Financial Report of 2014 for Traverse City, Michigan. In this Comprehensive Annual Financial Report for the city of Traverse City, Michigan, they break down for you the pension funding ratio, which is calculated by taking the actuarial value of assets divided by the actuarial accrued liability, meaning taking the value of the fund of the pensions and dividing it by what is owed presently to all retirees who are vested in the pension system. So in this case, they took the 3.7 million and divided it by this 6.8 million figure, and that's how they arrive at the pension funding level of 54.5%. The next funding level you need to look at is the unfunded liability of the pension plan. To calculate the unfunded liability, subtract the actuarial value of assets by the actuarial accrued liability. So here they took 6.8 million subtracted from the 3.7 million figure, and you arrive at the unfunded actuarial accrued liability of $3.1 million for this pension system in Traverse City, Michigan. Starting with fiscal year 2015, government entities are required to disclose their net pension liability on their annual balance sheet under rules set by the Government Accounting Standards Board. And here you can see in the Detroit Public Schools 2015 CAFR, they have to list a net pension liability of $872 million. GASB is requiring that these net pension liability be listed in different areas of the comprehensive annual financial report. So here they actually list it with all other liabilities to get an idea of the magnitude of the pension liability versus other long-term debts. And here they're comparing it to the capital debt of 1.9 billion. They're also comparing it to other operating year-to-year liabilities, such as $78 million in accounts payable, unpaid bills in Detroit Public Schools, $124 million in salary and benefits, and various other types of debts that this school system is essentially beset with. Data in these comprehensive annual financial reports is very reliable, but like any other type of data, you have to verify and understand what exactly the data means. And here in the Detroit Public Schools 2015 Comprehensive Annual Financial Report, they list $98.4 million in contractually required contributions towards the state's pension plan. They also list a number below it that is labeled contributions in relation to the contractually required contribution. And that is the same exact number except negative 98.4 million. And so this would lead you to believe that they didn't pay anything, and in fact they were very much behind last fiscal year and did not make their payments on time. And this is one thing that I had to ferret out in a story to have a better understanding of what was going on with their pension liability and their payments. This ends my report on comprehensive annual financial reports. If you have any questions, you are free to email me at clivengood@gmail.com. And you can also look into this information yourself at the links provided here on the report. Thank you.